Now that the US has attacked Iran's nuclear capability, we'll find out just how real is the risk of disruption to oil and gas supplies out of the Middle East. Because if Iran can't block the Strait of Hormuz now, then they never will. Around a fifth of the world's crude oil passes through the strait. A fifth of our LNG does too, but the risk to gas supplies is smaller because 85% of the natural gas consumed in the world is not LNG and is delivered by pipelines. For the US energy sector, higher oil prices are an opportunity. Domestic production has not been growing this year because weaker demand has caused prices to slip. This has even led some to forecast that US oil production will fall next year. If higher prices are sustained, that will provide a boost to production. It'll be positive for companies like Plains All American and ONEOK that manage a lot of oil infrastructure. Hedge funds and other money managers have been building up long positions in Brent oil futures, with exposure almost tripling over the past month. Some of those positions will be for sale if oil goes up sharply. Any blocking of oil supplies through the strait is expected to be short-lived, but it's possible that crude prices could maintain a risk premium for some time. This would allow US producers and their related infrastructure partners to continue to benefit from an uptick in US volumes. US natural gas won't see any near-term impact because we're already exporting as much as we can, limited by the availability of liquefaction terminals. Europe is our biggest buyer of LNG, and it's typically done under long-term contracts of 10 years or more. The Europeans also buy LNG from Qatar. I think at the margin, the US should look like a more appealing partner, since supplies that have to cross the Atlantic are at less risk than coming from the Arabian Gulf. But it'll take time to see if there's any impact given the long-term contracts that are typical in the industry. Broadly speaking though, America's strike on Iran should benefit US midstream energy infrastructure. It's here, out of harm's way. Higher oil prices will stimulate a bit more production. And war in the Middle East emphasizes the safety and security of US energy, both for our own use domestically and as an exporter. You don't need to be an expert in geopolitics to see the optionality that an investment in US energy gives you. If you're interested in learning more about the energy sector and interest rates, then don't forget to subscribe and follow us on LinkedIn and Twitter. Our handles are in the description box below. To find out more about what we're thinking, you can sign up for our twice-weekly blog at sl-advisors.com. If you have any questions you'd like answered in this video, then please leave them down below. I'm Simon Lack. Thank you for watching this video.